My name is Samantha Fitzpatrick and I'm one of the co-managers of Moray International, which is a large global income investment trust. I've been involved in the management of the fund for many years now, along with my colleagues Martin Conahan and Bruce Stout. And in terms of what the trust is, as I say, it's a large global income investment trust, and the objectives are fairly simple. We want to grow capital and income over time above inflation, which has been challenging of late, although the longer track record is decent for that. We want to have an above average dividend yield on the trust. That is in comparison to what our peers are according to the AIC. And looking back over time, the yield on the trust has been between 4 and 5%, pretty consistent over the last 20 years or so. We want to be able to pay income out of what is generated by the underlying holdings of the trust from income earned. So that's a bit different from some other trusts, even within the one sector. And we also have a very healthy reserve base. Because the trust has been going for so long, it was set up in 1907, we have been able to put money away for a rainy day in terms of paying income out of that if need be in difficult times. We have a fully covered dividend, back to a fully covered dividend as at last year, and the amount we have in reserves just now is roughly 70 million, which is equivalent to 1 year's worth of income. The trust is truly global in nature, and we try to make full use of that remit. So at the present time, we have roughly 1/4 of the trust's assets based in Asia, 1/4 based in Europe, 1/4 based in North America. We have around 12% in Latin American holdings at present, about 5% in the UK, and about 7% in fixed income, which at the moment is emerging market debt holdings. From a sector perspective, again, it is very well diversified, and that's what we're trying to achieve at all times, with mid-teens percentages in categories like technology, healthcare, telcos, but we do have exposure to all market sectors, either directly or indirectly. The maximum position we would have in any one company is 5%, and we do have a stock that's bumping against that at present, a company called Broadcom, which is a US technology company introduced back in the dark days of COVID about 3.5 years ago, and that one has been a very strong performer. So that's up about 80% year to date. And that's, as I say, about the 5% limit. So we're mindful of that, and we will take money out of that if need be. In terms of positioning, as I say, a vast range of companies in there. So although we have Broadcom, which has done very, very strongly, some other tech names also doing very well year to date. A company called BE Semiconductor is actually the best performing stock so far this year, up 120%. Offsetting that, we do have names which have struggled in this particular environment. China Vanke, for example, one of our Chinese real estate holdings, has halved year to date. So actually that bizarrely is what we want. We want different stocks doing different things at different points in time, so that if you add them all up together, you don't get the same swings and the same level of volatility. If you look at the trust from one quarter to the next, you typically don't see big, huge changes in positioning when it comes to sector exposure or country exposure, because it is a buy and hold strategy. Sometimes it looks like we've been doing very little from a trading point of view. This first half of this year actually was very quiet. In that sense, it's driven at all times by opportunity. But this quarter, in Q3, we have seen some interesting things happening in the markets, and we have made some changes to the trust. So we sold out of 3 names over the course of the quarter, 2 of which were telecom stocks. MTN is a South African-based company, a relatively small position. Conviction was fairly low, so we sold out of that name. We also sold Taiwan Mobile, another telecom stock. We've got plenty of options in telcos, so it's a case of sometimes looking to see where your strongest conviction ideas are, and that was not one of the strongest names. Its dividend yield has been stalling over the past wee while. It's because it has to spend so much on capex. So that one we decided to divest of. And the last sale was a company called Kimberly-Clark de Mexico. It produces paper products. It's linked to the American parent, Kimberly-Clark. And the reason we sold that was purely for performance reasons. It's a really good company still, we believe, but it had traded accordingly. The valuation was looking quite stretched, so we divested of that name. On the other side, we've introduced two brand new holdings over the quarter. And the first one is Walmex, which is another Mexican consumer company linked to Walmart. We introduced that one over the quarter. And the other one was Hong Kong Exchange, one of the largest bourse operators in the world. That was another new addition. Now, looking at where these companies are classified, it hasn't resulted in huge changes in terms of the overall exposures. Over the third quarter, the trust performed roughly flat in sterling terms. There's been various moving parts, as you would imagine. So holdings in the UK and in Europe performed pretty well. Fixed income holdings also added value over time. The weaker categories were from Asia Pacific and Latin America. Again, some stock-specific reasons behind that. From a sector point of view, some of the larger categories like tech performed well, healthcare performed reasonably well, and also energy stocks, which we hold, performed in line with the market, so they added value. That was a pretty strong market category over time. On the negative side, some of the telco stocks and the industrial stocks were a bit weaker, again more due to stock-specific reasons. So some working, some not working, but a quarter is a very short time period in terms of how we would determine how our holdings have performed. The longer term track record is what we would always point people towards, especially measured against have we done well or badly compared to the three key performance indicators I mentioned at the outset. I thought it might be interesting to just give a little bit more information about the two new positions that we have introduced over the quarter. So Walmart de Mexico is one that people will be half familiar with anyway, linked to the parent company in the States. So this is a general retailer. It produces lots of things for people to buy, food, general merchandise, etc. And it's a company which has a very different position compared to what we would think of here in the UK, for example, where operating in that environment is really, really tough in a lot of markets. But Walmex is in the fortunate position of being very dominant in its home market. It has around 50% market share of the formal retailing market within Mexico. It has lots of different store formats, so it's in the position that it can offer various different options to people of all different social classes. About half of its business is in discount retailing, where price is all important. And what made us interested in that company now in particular is that the company has taken the hit in some ways from rising inflation in Mexico. So instead of passing all rising costs onto its consumers by way of raising prices, it held back from doing that, particularly in the discount stores, to protect its customers in some sense, to build loyalty. But what has happened in the past is that it did take a hit on margins. Now in Mexico, that situation is changing already. So the company should benefit on the other side of that as its own costs come down. At this point in time, we think it's looking fairly attractive from a valuation perspective. It has no debt. It is in the position also that it's able to grow its dividend, which is something that's very important as we look for all our investments to contribute to the income generating abilities of the trust. And the other one to mention is very different, Hong Kong Exchange. This, as I said, is one of the largest exchange operators in the world. It's the fastest growing exchange in Asia. And the important thing for this company is that it is now being able to expand a programme which it set up about 10 years ago now, Hong Kong Connect, which means it can facilitate cash flows both into and out of China. So there's lots of runway for that particular business. It also is growing its dividend. It has traditionally been viewed as very high quality but expensive. But given general negative sentiment towards China, the valuation has come down quite markedly. So that's why we decided that now was an interesting time to initiate a position in that business. We generally like exchanges. If you look at the margin profile of these businesses, they stack up very, very well. They tend to be monopolies or quasi-monopolies in the areas that they operate in. They are so important, so I don't think there'll be too much interference from the authorities in terms of just letting the company do what it does very well. So that's one that we're quite excited about in terms of building a position and holding, hopefully for the long term. In terms of outlook, this is always a tricky bit, especially because as a global trust, we have so many different markets that we're trying to keep tabs on. And thankfully, we don't have to have a view on every single one of them from a macro perspective, because when we are looking at making investments, it's all driven by the individual companies. And so I think looking at the future, there's a lot to be nervous about right now. Inflation is still an issue in different parts of the world. There's still lots of debate about what's going to happen to interest rates going forward in all different places. So caution, I think, is the name of the game right now. But as I say, thankfully, we are not pigeonholed into any one particular market or any one particular sector. And it means that if you can spread that exposure over many different types of businesses, that gives you confidence to hopefully deliver value over the long term. Thank you very much for listening to this update today, and please do get in touch if we can provide you with any more information that you need. Thank you.